Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, August the 30th. The year's 2022. Let's talk trading. Trading is all about you, part 2. These videos are for educational purposes only. Your results may differ from mine. I had a reply yesterday, and one trader said that, the difference that makes the difference is self-control and discipline. I would say there's a lot of truth to that, but there's a little bit more. There's been a lot of studies over the years now, in recent years, about habits and environment. And so you can only have so much discipline. I guess it's kind of like a well. There's only so much, you can only take so much out, and then you have to give it time to refresh itself. So they're saying is what you have to do is you have to create habits and an environment and systems that work for you as opposed to against you. So in trading, there's a lot of things that can compete for your attention. On your computer, you can open other tabs, or you can look at your phone, can watch YouTube videos while you're trading. There's just so many different things competing for your attention. So what you want to do is minimize those distractions, set up a system that almost forces you to do what you'd say you want to do. And then from there, hopefully you get the results that are your desired results. So for example, if you have a problem pulling the trigger and you trade in such a way that you have advanced notice, then what you can do is you could set pending orders out there with your TP and or stop loss filled in. So it's still under your control as opposed to having it fully automated via an EA or robot. So for example here, you can see this is where price opened across the double O right here. Even though there's triple O's, I just hate that fifth digit, so I call it the double O still. So right here, there was an opportunity to go long. Now, the thing of it is, depending on your broker, you might have a spread. So there's a question: do you get in when the ask hits this, the bid hits this? Maybe you split the spread. You have to figure that out, because if you would have jumped in here with the spread, you would have seen a 9 pip drawdown, and depending on where you put your stop loss, you may have been stopped out. So if you look at it, you can see here that that was a potential entry, going with the double O. But it really is all about you. And if you do lack that self-control and discipline, is trading really for you? If you think about it, is there something in your brain, in your programming, that makes you your own worst enemy when it comes to trading? And sometimes that your P&L statement can tell the story. because, you know, it's easy to say, oh, they ran my stop, or they did this, or they did that, as opposed to saying, looking at it and going, well, you know, I did have the opportunity to take a couple of pips there and I failed to do it. I mean, right here would be a nice example. It ran up about 3 pips, crossed the daily open, could have taken it, and it came back down. Then gave you a second opportunity. And actually, you could call it the third opportunity in this little run here. And if you know the pound, it does like to dance around that open. So for example, here, you may have gone short. If you didn't take your pip or two, probably would have been stopped out. And that's looking at M1. Maybe if you move up a time frame to M5, it might tell a slightly different story. So looking at this M5, we don't know how much it wiggled in this particular bar, but you can see here, you probably could have picked up a nice 10 pips from here to here. And then going with the M5 candle color here, that was probably good for about another 5 pips or more to the downside. 4 pips to the downside. And depending on how heavy you trade, that could be some real money. And that's, you know, another thing. It's all about you. It's about your how heavy you trade. You know, have you put enough money in your account where you can trade, you know, say $25 a pip, $20 a pip, or even $10 a pip, where you could start to make some real money. Because if you're trading, say, $25 a pip, 4 pips, that's 100 gross. But I know there's a lot of traders out there with the $100 accounts, $1,000 accounts. They can't trade that heavy. So you can't really dream of that Lamborghini if you're only trading $1 a pip. I mean, you'd have to have one heck of a run. Not saying you can't do it, but don't think you're going to do it in a short period of time. And some of you are just learning trading. We're all still learning trading. I've been at this game since, what, 40 years now? Yeah, I'm still learning. And the thing about it is, you know, it's all about you. And something else, it's a lot about your beliefs. And that'll affect your attitude. And it's hard to trade if you've got a false belief or bad, you know, that leads to a bad attitude. Because then you've got biases, your mind is clouded. I mean, you almost have to take the I don't care approach on each trade, meaning you don't care if it's a winner or a loser. You really don't. It's tough to do. I can get in that mode every now and then, but not all the time. And that's when you put your trade on because you've got the signal and you don't care what happens. You've got your stop loss set, so you know pretty much the worst thing that can happen. I mean, you can always have those flashes. You know, it could run 20 or 30 pips in the blink of an eye, and you get stopped out at a lot worse spot. But that's just one of the risks of trading, because it can always flash in your direction. So you have to see what attitude you have towards trading. You know, if you think they're out to get you and the market hates you, that'll happen. But sometimes, you know, if you just really analyze things, you might find something that's a clue that you can change, maybe when you enter or why you enter or which direction you enter, and you can increase your profits. You know, you've probably heard Walmart and I, you know, joke where I call myself Mr. Inflection Point. But I think I found out how to cure that. I'm trying to see if there's a, I don't really see anything on this chart that would, well, maybe right here. No, let's see. Actually, right here going short. You see what happened right at this level? Right there, how price didn't break it. See, if I was looking to short and I jumped in on this candle, chances are they're going to fill me at that lowest level. And then you see what happened next. And then you see it never gave me that opportunity to exit. So what I've learned is when I see, you know, one of these big bars, in fact, this is an outside bar, or if I just see this type of movement, I say, you know what? I'm not taking that short. I'm going to wait. Because you can see here, once again, have a bigger candle. And if I would have shorted right here, thinking it was going to come back, especially on M1, you can see here, once again, that inflection point, it would have never given me an opportunity to get out. And I'd still be stuck in that trade. So, you know, I could have continued saying that, you know, the market this, the market that. But when you can analyze your trades and see what not to do or how to stay out of a particular situation, or maybe even use it to your advantage, saying, you know what, if it drops down and then comes back and breaks that high or goes through that close, maybe I'll go long. So you can see the difference. So that's just one of the things where the market's all about you. So rather than think that it's out to get you, you have to figure out what you're doing and what you should be doing and what you should stop doing. So, fellow traders, that just goes to show it's not what you trade, it's how you trade it. So go out there and drain the banks. And please click the like and subscribe. This is the Rumpled One, over and out.